start off this episode, I would like to offer a few tips that I offer any new investor as they get into the field. You see, whether they're choosing to become a fix and flipper, a buy and holder, or a wholesaler, I always offer them this specific piece of advice. Number one, choose your market. When I say choose your market, most people will think I'm talking about choosing a location. However, a market and a location are two very different things. Let me break it down for you. Choosing a market essentially means choosing a product. So, someone who is going to rent a 2-bedroom condo is a completely different market than someone who is going to rent a 2-bedroom apartment in a multifamily complex. And someone who is going to rent a single-family home would be a completely different market versus someone who is looking to live in a condo. For example, if I have a single condo in a downtown metropolitan area, chances are the market that I will be renting to would be young professionals, young adults, bachelors, students, if there's a college campus or a university nearby. And if I'm going to buy and hold a single family home, then the market I'm going to be renting to would either be, for example, young families, growing families, retirees who are looking to downsize. This is what I mean when I say choose a market. The second piece of advice that I would offer is choose a location. See, when I say choose a market, people often think I'm talking about location. But now that we've cleared that up, choosing a location is exactly what it sounds like. Whether you're looking to invest in a metropolitan area or the outskirts of a metropolitan area, what is very important to understand is choosing your location. So once you've chosen your location, be sure to study this location. You want to know things like if there's any planned construction, any planned housing developments, if there's any plans to add jobs or infrastructure within the location. You want to know if the population in the specific location has been growing, as well as if it's been digressing. Choosing a location and becoming an expert of that location will really help your real estate investment journey. I'll give you a great example. A few years ago, we were looking for property in a suburban area in the Greater Montreal sector. And we found this one specific sector that had older buildings, but a lot of land to be developed. And in this specific sector, there was a housing project of 200 units, as well as plans to add 3 more grocery stores. So this tiny little rural sector 5 years ago when we started investing in it was at the very beginning of its growth. Today, this sector not only has 4 grocery stores, when 5 years ago it had 1, it has brand new housing developments, sectors where there are brand new condos, brand new multifamily properties, and brand new single family homes. As well as that, Google added a warehouse in the sector, which added 4,000 more job posts. And this ultimately drove the demand for housing, as they had more people move to the area to take those 4,000 to take those 4,000 jobs at Google. This drove up the demand for housing, which ultimately drove up the rent prices. So by choosing a market and choosing your location, you will essentially become an expert in your specific location to your specific market. You see, a mentor of mine has a saying, and that saying is called focus. Follow one course until successful. The most successful real estate investors do not diversify their portfolios. For example, if you're someone who likes buy and hold, then chances are slim. If you're going to buy revenue property for long-term buy and holds, the chances of you operating short-term Airbnbs will be slim. It's out of your expertise. Follow one course until successful. Otherwise, if you try to implement multiple strategies in multiple markets and multiple locations without becoming the expert at one, this could be really detrimental to your real estate investment journey.